So the Indian markets just got hit with a pretty big shock. But underneath all the headlines, there's this surprising story of resilience playing out. And it all begins with one single, really jarring number.
Yeah, this. The Sensex benchmark index just plunged nearly 765 points. I mean, that's a huge drop. It caught everyone's attention, wiped out recent gains, and pushed the index right below that crucial 80,000 mark.
So what on earth just happened, right? This wasn't just some random dip in the market. No, a single, powerful trigger sent these shockwaves through the whole economy.
All right, first things first, let's dig into the immediate damage. Just how widespread was this shock, and who really felt the burn the most?
And get this, it wasn't just a one-day event. The Nifty 50, another one of our key indexes, fell for 6 weeks straight. Now, to give you some perspective, we haven't seen a losing streak go on that long since the big market crash at the very start of the COVID pandemic. That tells you just how seriously investors were taking this.
So, okay, who got hit the hardest? Well, the immediate fallout slammed major exporters like IT and pharma. But the vulnerabilities spread much wider, right into the heart of India's export economy. We're talking textiles, auto parts, and chemicals. This wasn't just random panic, it was a really targeted reaction.
And that targeted reaction, well, it leads us straight to the cause of the shock. It all boils down to one word: tariffs. And here it is, the catalyst. The U.S. government announced a major hike in tariffs on certain Indian goods, basically doubling the rate from 25% all the way to 50%. And the reason they gave? It was about India's continued trade relationship with Russia. This single announcement was the match that lit the fuse for everything we've just seen. Now, this didn't just happen all at once. It was more of a 1-2 punch. First, there was an initial 25% reciprocal tariff. Then, the U.S. tacked on another 25% as a penalty. You put those together, and for some goods, the total tariff barrier suddenly shot up to a staggering 50%.
So who's caught in the crosshairs of that huge 50% tariff? Well, it's pretty much the backbone of India's export economy. We're talking textiles, auto parts, chemicals, and the gems and jewelry industry. These are the companies now facing immense pressure on their sales to the U.S.
Okay, now this is where the story gets really interesting. Because if you only looked at the headlines, you'd be missing the most important part. See, beneath the surface, there was this incredible battle raging between two very different groups of investors.
On one side, you have this number, over 15,000 crore rupees. That's how much money foreign institutional investors, the FIIs, yanked out of the Indian market in just the first part of August. They saw the tariff news, they saw a huge risk, and they started selling off their holdings fast.
Now, you'd think that would cause a total market collapse, right? Foreign money is fleeing, panic should be setting in, but that is not what happened. There's another, much more powerful side to this coin.
And here it is. While those foreign investors were selling, domestic institutional investors, or DIIs, were pouring between 25 and 27,000 crore rupees into the market every single month. They weren't running, they were buying.
And here you see the two forces right next to each other. On one hand, you have the foreign investors selling, driven by this global fear. On the other, you have domestic investors buying, fueled by local confidence. This was the hidden tug-of-war that actually cushioned the market's fall. A massive outflow of cash was being met by an even bigger inflow. It's remarkable.
Which, of course, brings us to the big question. What is fueling this domestic confidence? Why are local investors so optimistic when global players are so nervous? Let's unpack the economy's hidden strength.
So what do these local investors see that the foreign ones don't? Well, the answer has less to do with global trade and everything to do with what's happening right here, in India's own backyard.
The answer is this powerful concept, domestic consumption. You see, while exports always grab the headlines, the true engine of the Indian economy is its own massive population buying goods and services. This internal market acts as a huge financial buffer, insulating the country from the full force of shocks like these tariffs.
And who are these domestic buyers? It's not one single entity. It's this combination of large mutual funds and insurance companies making strategic investments, and, just as importantly, millions of everyday retail investors, steadily putting money into the market each month through those systematic investment plans, or SIPs. It's a really broad base of confidence.
So where does this leave us? We have two powerful opposing forces at play. Let's take a look at what the road ahead might look like.
Ultimately, the market is balanced on a knife's edge. On one side, you've got persistent selling from foreign investors worried about global risk. On the other, relentless buying from domestic investors who believe in the local economy's long-term strength.
In the short term, we should probably expect more volatility. The bearish, that negative sentiment, will likely stick around until there's some real clarity from trade talks. In the medium term, everything hinges on the outcome of those negotiations between the US and India. And long term? This is a major test. Can domestic strength truly withstand sustained global pressure?
But there is a potential path to stability. Most analysts believe that these high tariffs are likely just an opening move in a negotiation. The expectation is that eventual talks between the US and India could lead to a compromise, moderating the final tariffs and calming the market's nerves.
And that leaves us with this final, powerful question. As global trade becomes more unpredictable and prone to shocks, is the ultimate defense for any economy not its exports, but the strength and confidence of its own domestic market? That's what's being tested right now, and the whole world is watching.